Alright, so I wanted to do this video when it comes to margin debt. I got an email from one of my subscribers and they showed me something really interesting, or they pointed out something interesting, how the margin debt in March of 2014 actually decreased. Decreased, that's right. It actually went down for the first time in 8 months. And why is that significant? Well, the article that my subscriber sent to me indicated that whenever you have margin debt starting to go down, that's a red flag. And I could show you instances based on the NYSE chart where that article may be interesting. And now the question that I'm going to pose there, or pose for this video, is there going to be a severe market crash? And we could analyze the data and I could show you which direction or where my mind's pointing at right now. Alright, if you want to look at securities in the millions of dollars, right, comes to margin debt, what happened in 2014? Well, March of this year, they're 1 month behind. You can see a decrease if you zoom in closely, of 465 million to 450 million. So, if you want to look at it, calculation. So, roughly a 3% decrease in the margin, right? And now I want to show you the last 2 times where we had that correction, severe market correction. Once again, I'm going to go back to this graph because I like this one that I made. And 2000 and 2008, 2009. Okay, let's go back to this graph here. So remember, 3% decrease in March from the highs of this year in February. Okay, I guess I'll have to go right over here. So if you look at the margin debt in 2007, it peaked in July, right around the time where Bear Stearns hedge fund blew up, 381 million. So if you look at that, right, 381 minus 331, 13.12% decrease. Okay, that's really interesting. So margin debt decreased 13.81 after the high. So that could have been a red flag that, hey, you know what? Something's going on here. Right now it happened roughly 3% decrease. And the reason why I don't think it has dropped significantly is because you have every central bank keeping interest rates at 0. So you have the yen carry trade, you have money coming in from the Central Bank of the United States as well. And that's why it hasn't collapsed like it did in 2007. Now let's go to the year 2000. And by the way, it was 4 months or so before the market top. Okay? Before, I don't know what's going to happen in 2014. But if you want to go to 2000, right? The top was in January of 2000, January 14th. Dow hit around 11,700. And that's my target for the Dow approximately in 2017-ish, 2018. But anyways, if you want to look at the top in margin debt, it happened 2 months after the top in the stock market. And you could see the rate of decrease in the year 2000. So 278 minus 251 by 278. So 9.7% decrease in the margin debt. Now, my question in the beginning was, will we see the type of crash that we saw in 2000 and 2007? 2000, you could argue, was, how should I say it? It was a crash in the technology sector. That's where you saw asset prices decrease the most. And you saw real estate prices decrease the most for the 2008-2009 drawdown. And where will we see the next drawdown, the significant drawdown? My opinion, it's going to be in these momentum stocks, such as biotech, which I have been shorting in and out. I'm probably going to get back in soon, throwing in a short position on there. And in addition to that, I see some of these high momentum stocks. That's where the margin's going to come out significantly, and that's where we're going to see, in my opinion, the markets drop down the most. Now, we shall see how market forces are going to react. But once again, from the top, you saw margin debt decrease roughly, I don't know, 9.7% 2000, over here 13.7 in 2007, and then 2014, I would say, I don't know, roughly a 3% decrease as of right now in 1 month. So once again, based on looking at this margin debt, it's only one way of looking at the markets. It just seems that the markets are going to drop in a slow but steady pattern. Not pattern, but a slow and steady way. It's not going to go down in a straight line like we saw in 2000 and 2008, 2009. But we shall see how it's going to react. I think we're in a secular bear market. And before I go, I wanted to discuss some YouTube drama, right? And it always seems that there are these individuals who tend to be a little older than I am, and they always get into like these arguments, or they always do these call out videos. I mean, on occasion I do some of those videos, but I try to maintain my composure and all that. But at the same time, when you start to see people act like they're in high school again, it just reminds me, is YouTube really worth it? Is it really worth putting all these videos out there? I mean, the question becomes, some people are starting to sell items on YouTube, which is fine, right? As long as, number one, you are not engaging in some sort of fraud of any case, you're not making some BS stories and you're selling something, good for you, right? It's capitalism. Capitalism is the best path to prosperity. So when I see people starting to sell stuff on YouTube, great, right? A lot of people buy items that they really don't need. I mean, some of these items they may not need, but hey, they like collecting these items. So good for them. I applaud every entrepreneur out there who's not cheating, who's not lying, who's actually doing something that's positive out there, right? Instead of being a leech and getting a government handout. Not if there's anything wrong in getting a government handout. Sometimes people do need help. And if you're desperate, then sure, get some government assistance so you could pull yourself back up. I'd rather have charities do that, but it happens. But anyways, so I see these videos and attacking people. I mean, if you're going to attack people based on some of the scams going out there on YouTube. Like I mentioned, there's one newsletter out there that continues to, how should I say it, has a newsletter and is selling the stocks, is recommending stocks and then selling before telling their subscribers to get out. I think that should be scrutinized. It should also be scrutinized how some people on YouTube actually are paying third-party sites to get their views up, right? I've noticed that some of these channels had 1,000 subscribers less than I did, and all of a sudden they have 3 times the amount of subscribers that I do. So how does that happen? Well, there's something going on there, and it's not someone just linking up the YouTube videos and sending it around. There's more to it. So there are third-party sites that actually you could pay to artificially boost up your subscribers and your video counts as well. I've never done that. I have talked to people that have showed me, say, hey, look at this, you could get a lot more views, and I'm like, I don't want to do it. The person that showed me didn't want to do that as well. So if you want to look at what's going around in YouTube, you should look into that. And also, some individuals need to chill out and grow up. people in their 30s and 40s on YouTube. Comment section, people that do videos. Alright, just want to get that off my mind. I'll talk to you later, guys. Thanks. Bye.